We've got Gerardo in Venezuela, Paul in the Caymans, bit of an international group. John is in Australia as well. And we got Robert down under, Lucian in Vancouver. Glenn, I forgot where you.
I'm in the Dominican Republic this week.
Oh, okay.
Cayman.
Nice. Now, are you still living in the Caymans, or are you planning to move?
Yes, that's home base for now.
For now. I like that. All right, it's the top of the hour. Let's get going. Remember, this call of the week is for you to bring your questions, sharing ideas with other group members, getting coaching from Matt or me, or even other members. So please be ready if you have anything you'd like to discuss in the group. I know there's been some questions. Paul, you had a question about calls and puts in Iron Condors. We can have that discussion. And then I know Dean was interested in the Delta Airlines short call spread that Matt brought forward on Monday. And we had intentions of turning that into an Iron Condor. So perhaps we can talk about those three things, but really anything that you want to talk about in this call. Stock, crypto, and options trading has large potential rewards, but also large potential risks. You must be aware of the risks and be willing to accept them in order to invest in the stock, crypto, and options market. Do not trade with money you cannot afford to lose, and this is neither an offer to buy, sell, or recommend a particular stock, crypto, or option. All right. One thing to note, everybody, I've said this every day this week. This is the third time I've said this to this community. The Federal Reserve is meeting in Wyoming this week. Fed Chair Powell will speak at 10 a.m. on Friday about the state of the U.S. economy, signaling his intentions going forward with monetary policy, rising interest rates. Maybe not, God knows what it's going to lead to. If you take a quick look at the overall markets, they haven't changed that much. Well, since yesterday, the market had set another low. This is the SPYs, and we hit our 200-day moving average resistance, gap down, not a whole lot of volume. And then we had a lower low yesterday, and today we got a bit of a bounce right off 412 or so. So we got a little bit of an update. It means nothing. It doesn't mean the market's reversing. It just means we had a sort of a consolidation day. And I would expect that from here until Friday morning, 10 a.m. Eastern. And so for us, we need to be in mind, keep in mind that depending upon what Powell says on Friday, the markets could very well continue their slide, or they could very well make another strong move, maybe even above the 200-day average. So that's what we have to contend with in the next 48 hours or so. And we need to keep our eyes on it. Our RUT trade, we're doing really well on our RUT bearish credit spread, bearish broken wing butterfly. Our bearish credit spread is now making some of its loss back. Our short strike is up here. We'll look at this trade if you like. We had a bit of bounce today, just like with the SPYs. So anything can happen Friday at 10 a.m. I'm going to keep saying that. You really got to be ready and anticipate the worst. So the VIX today hit resistance and then has come down a bit on that recent rise. The VIX is going to hang out most likely right where it is until Friday, unless some insider information gets leaked. Nobody knows for sure. Let's look at oil, USO. Oil's bouncing. It's now above the 50-day average, which could be meaningful. We'll see. Let's check volume. We got strong resistance up here at 80. So really nothing to worry about on no serious directional prognosis on oil unless it's above 80 or perhaps even below this 200-day average here, which corresponds to 70. So 70 to 80 is the range for oil. And don't worry about predicting direction on oil until it breaks out of that range. Bonds, I haven't looked at bonds today. TLT is a dropping. All right, so that's because of interest rate hikes that are planned. We won't get an interest rate hike on Friday, just so you know. That'll be the next meeting, which is in September, I believe. So expect an interest rate hike there, but the bonds are dropping. Perhaps we could look at some bearish broken wing butterflies on the TLT. HYG is corporate bonds, much more volatile than the TLT. This is the kind of stuff you got to stay away from with broken wing butterflies anyway. When you get gap down from 78 down to 76, That's not good for a bearish broken wing butterfly. It wasn't good here either. I was in a bearish broken wing butterfly during this crash, and that's the only time when broken wing butterflies become a bit tenuous to adjust. You can still mitigate risk, but not to as high a degree as if the stocks are moving, let's call it gracefully. What else? Gold, GLD. Gold bounced a little bit today, probably because the US dollar dropped, I'm guessing. You having trouble with my computer today here? Or I think it's my mind, actually. UUP dropped down in the US dollar, gold rose. So no risk off evident there. We're in a holding pattern pretty much between now and Friday at 10 a.m. It might take Powell a while to get any discernible information out. So it might be later in the morning, but that's what's coming on Friday. All right. Now we've got trades we could be looking at. Matt, do you have anything you got your eyes on right now?
In terms of new trades to open, no, but I'm really happy with the way some of the ones we've got on are performing. And there's a call out that I want to make. NVIDIA is set to be trading lower. It's got revised forecast. I saw on CNBC before. So probably another one for us to keep our eyes on, a good candidate. The news keeps getting worse for Twitter, as I published last night. So keep your eyes on that. Good opportunity to potentially get some trades on. Had a bit of a bullish bounce today. So we could potentially look at maybe a broken wing on that. Because I don't really see the news getting any better.
Yeah, well, the bad news originally was a whistleblower, and
yeah,
could be SEC investigations, that sort of stuff. So we'll see. It's a little volatile. I'd be a little nervous about it, but I think broken wings would make some sense later on.
I wouldn't want to stand in front of the train with a credit spread.
No, I wouldn't either. I would be okay with selling a bear call spread up top here somewhere though. Right now,
we get enough premium.
Yeah. All right, everybody. So if you have anything you'd like to share, any questions that you have, please raise your hand. Let me go to a different view so we can see everybody. All right. So if you have questions,
just on the back of what you said before, whilst there's no interest rate hike coming out, it's going to be very interesting to see how Powell's narrative moves the market on Friday, because there's a lot of talk about, him possibly projecting what their actions are going to be, what their intentions are. And if we reflect upon what he said a few months ago, where he said we're going to, or even up to a year ago, start thinking about putting rates in, look at what that did to the market. And that wasn't even an action, it was just a narrative. And then when he said we're going to stop, pause and reevaluate, that drove a bullish sentiment in the market. So whilst there's no actual increase coming, what he talks to is going to be very interesting to see how the market responds.
Yeah, exactly. That's the thing. That's what the market's waiting for, to get a signal for how he's going to adjust monetary policy, interest rate hikes. Inflation hasn't abated yet. And unemployment is rising. And those are signs of inflation, an inflationary environment. And to curb inflation, it's like a gas pedal. If they want to curb inflation, they push down on interest rates, they make them higher, and that slows everything down. That slows spending. Everything becomes more expensive. Credit becomes more expensive. Interest rates are higher in credit cards, real estate, everything. The cost of money gets expensive, and that slows everything down. When inflation is this high, though, the problem is if he pushes the accelerator down, raising interest rates high and fast to avert a depression, he can oversteer, so that's where recessionary fears come from, is that he's got to raise interest rates to abate this inflation. And if he overdoes it, it could spin us into a recession. And that's where the fear comes out. And that word recession is self-fulfilling. If enough people start talking recession, that impacts the psyche around commerce,
Yep.
All right.
And Claudius just called out the announcements. The 21st of September at 2 is when, if we get a rate hike, that's what it's potentially forecast to come out at.
Awesome, Claudia. Claudia is I've been working with Claudia for years. Claudia is got her. Claudia, you want this to happen for you. I can feel it. You're after it. You are involved. You're contributing. I can tell you're working hard at this stuff. I'm really proud of you. Good work. Are you at work right now, Claudia?
Sort of.
Shh. All right. Anybody got anything?
Hey, Mike, I was going to
Hold on. Let me
say, why don't we take a look at there was a question.
Go ahead. Go ahead.
I was just going to say there was a question that came up around the Delta Airlines trade, and you raised it at the start of this call, and it was around when do we potentially look at getting in to the other side of that as an Iron Condor. Maybe we take a bit of a look at that and talk through what I was speaking to in the thread last night.
Yeah, go for it, man. Sounds good.
Sure.
What are your thoughts?
Sorry?
It was a Dudley Moore reference from Arthur. What are your thoughts?
Oh.
Your thoughts?
So, can you see my screen?
Yes, sir.
Fantastic. So this is the Delta Airlines bear call spread that we put on the other night for 12 cents, and I'll just pop down the bottom here so I can turn on like my little standard deviations to give me some guidance. So when we looked at Delta the other night, we were originally looking at an Iron Condor, and then we came up with the idea through discussion to say, well, if we wait a little bit, we can leg into this, because the intention with the downward pressures on airlines driven by poor customer experience, driven by the pending announcement from POW coming out on the weekend, driven by the inflationary pressures, would see this stock drop. And we can note that we've got support here at the 50. But when we got into this trade down here on the Monday, we were expecting this to come down a little bit. Now, what happens is, based on our prediction, had we got into the other side of the Iron Condor on Monday, whilst that put credit spread would have worked for us now, based on what our assumption was, and potentially could still be pending POW's announcement on Friday, if this retraces a little bit and passes down the bottom of this candle here, which would have been Monday's low,
Which
we're actually
candle?
going to get some more premium.
Hey,
Sorry,
when
this one.
Oh, go ahead. Go ahead.
This one right here.
We're looking at your
Also-
risk graph. All I'm saying is your risk graph.
Okay, my apologies. Let me change my screen share.
No problem. I figured you might have just shared the browser.
Yeah, I worked out what I did. I didn't share the screen. I shared the window. I'll start again. So on Monday, when we were looking at putting the Iron Condor on, we were here. And then our prediction, based on everything I just spoke about, was for the market and potentially the pressures on this stock to retrace. What that would mean is we would get greater premium to the downside. And as a result, we could look at putting our credit spread in the same place. If you really wanted to, you'd get a higher return on your investment as part of the Iron Condor, or we could look at moving that lower credit spread further away from this lowest low. Now, the strikes elude me as to what we were talking about on Monday, Mike, but if we were assuming...
It was 25 that you were talking about on Monday.
Thank you.
To start. Yeah.
Thank you. So there's a couple of different things that would happen. So if we were at 25 on the Monday and this was to retrace, we may be able to get a little bit further away. So we could do potentially a 22.50-20, or maybe even get right out of the way down at $20. So there's options. There's no absolute, no pun intended by options, but depending on what your stance is and how aggressive you like to be on these things, you could use it as an opportunity to garnish a higher return on investment or move further out of the money, move your risk further away. And being a risk averse trader, that is what I would do. So as we've had a slightly bullish run over the last couple of days, because we're moving further away, what that's done is the premiums down here will have dried up slightly. So at the moment, and what I was talking to last night is, I'm still prepared to wait on this trade. I'm prepared to wait to see what the announcement is coming out tomorrow, on Friday, sorry. If this retraces a little bit, I'll be able to yield a higher premium in my put spread down below, which will then let me get the risk further away and further out of the money. What it could also do, we're probably a bit early, but think about it if time was working for us a little bit, and I'll come back here. If we were further into this, let's assume we were down to 30 days and your prognosis, you were solid on your prognosis saying, you know, I feel that this is still going to channel. I have an opportunity to get greater premium in a put spread down below. So I'm now going to convert this into an Iron Condor. But if it retraced far enough, you could also make a further adjustment at the same time to what Mike spoke about the other day. The trade may be in a position at that point in time where you could close your short call spread down in entirety, and you could roll this down. So we're now starting to look at adjustments through the life of a trade to start squeezing more profit out of the trade as time goes by. So we'll keep tracking that as this trade progresses, but keep that in the back of your mind as well. Whilst you might leg into a trade, there's also the opportunity for you to adjust and roll these as time goes by when your spreads become worthless. So that's an option as well. Anyone have any questions on that? I'll pull up the chat box if I can find it.
We got to figure out a way to get our people to talk to us.
I know. Maybe we should sing a song. Do we have a song we can sing?
Yeah, we're going to sing until you speak. You don't want that.
I know. Thanks, John. Appreciate that. John was just giving some feedback on the analysis. So again, always encourage everybody to do back testing of their rules and things. And I have systems to find. Mike has systems to find. I'm constantly refining them. I reflect upon, you know, Tom's comment that resonates with me upon many between, you know, Mike and Tom. And one of them is that he finds himself being full-time R&D guy and a part-time trader. So true. So true. Always looking to get the most out of your systems. While we're waiting for some commentary, Mike, let's take a look at a couple of these Iron Condors. I was checking them out prior to the call, just while people have a look to see if there's anything they'd like to talk about. United Health is one that I'm most impressed about. It's doing really well, as a lot of these are. They're sitting in a great channel. And look at this, right on 540, 539, channeling sideways. Everything's great with this. I don't see any risk. I don't see any reason to adjust. Theta's working for us. IV's jumped up a little bit, which is fine. But Mike referenced the other day in the sniper thread, IV ain't there for no reason. There's a reason why this IV has peaked the way that it has. So the only thing that would lead me to do is remain diligent to my rules and keep an eye on this trade. Is there some news in the health sector? We know that biotech has got a bit going on at the moment, which may, you know, have some by proxy effect on it, but just keep an eye on it. Nothing really to be too concerned about now, just heightened awareness.
Yeah. Can we put that back up? Dean had a question on a thread that I thought was a really good one, and we haven't really covered it with Iron Condors, but Dean's question was, well, when you have this Iron Condor on, which is 2 credit spreads, how do you manage them? How do you manage the exits of these trades? Well, really, you have 2 credit spreads, 2 long-term credit spreads. So there's different ways to adjust them and things, but if you want to just stay with the basics, you want to treat each spread as an individual spread. In this first spread up top there, the 600, 620 short call spread, you know, we've got about we took in about what, $1.88, is that right? Yeah.
Yep.
So you have $1.88. So you have a buyback on that credit spread for 18 cents, and then underneath you'd have roughly a buyback for 10 cents, 11 cents, and you put those 2 GTC orders in. And remember, we talked about this week. When your short options start approaching 0, it's like a horse that you've ridden in the desert. You know, it's out of juice. It can't make more money. It can't get you any farther. So when you have these short options that are close to 0, or even a spread that's worth a few cents, take them off. They can only hurt you. A short put that you sold for 284 in this case, the 440 put we sold for 284. If it was worth, I don't know, let's say it was worth 20 cents, then you can only make 20 more cents out of that leg. And if the stock goes against you, then it will gain in value and you'll lose money on that short option. So you've got to be it's a really important distinction when you're trading all these different types of spreads that we're trading, is you want to keep an eye on the amount of value left in your short options. And as it approaches zero, they become a liability and you want to take them off. You can even adjust them. You could buy the 440 if it was back close to zero and lift it up to 500 or whatever and get more premium. But don't let those short options sit out there if they're worthless. Just take them off.
Exactly.
Yeah, we covered that yesterday, Matt, in our hedge fund class. And it's
fabulous.
really important. It's really important that you get that. You know, it is one trade, but it's 4 legs. Each one is in essence a separate trade. The other,
well, it's managing the risk.
Yeah, it is for sure. Yeah.
Always manage the risk. That's the thing, because sooner or later something will happen and it's going to bite.
Yeah.
We can only manage it as best as we can.
Exactly. And then the other side of that coin is if your 420 put in this case is worth 5 cents, don't sell it. Why? It's a lotto ticket. You don't need to sell worthless options, long options either. So a little nuance there that can make a big difference in your trading. Now, Robert showed me a trade yesterday that I thought was brilliant. Robert, I asked you to share that, and I hope you're willing to, because I was like, it was one of those moments where I was like, I don't know if anybody's ever watched the Our Gang, remember Spanky and Alfalfa and those guys? And then when they got surprised, they'd overact and they'd go, they would have to go, move their heads like, I'm really surprised. And that's what I did yesterday when Robert showed me an adjustment on a broken wing. So we can either do that tomorrow, Robert, or tonight if we have time. But I was really impressed.
Yep.
And it was similar to what I just said. He didn't sell a worthless option. He bought another one. And he doubled up on his puts. So little nuances that can make a big difference.
Sensational.
Anytime, mate. Anytime you like, Mike, I can do it. If I remember who it was. It was Space, wasn't it? It was Space, yeah.
All right, Matt, do you want to look at any of these other ones here?
Yeah, I was just going to take a quick look. I mean, it's really just a sanity check, Mike, just to see how these things are going. I might take a quick look at BP as well, because I know that oil's had a jump. But I just want to talk to my thought process around BP. Western Digital, another one we put on. Story doesn't change here, team. Just keeping an eye on it. It's doing its thing. Theta's working for us. It's channeling beautifully. IV elevated. What does that tell us? Remain vigilant. Keep an eye on it. Nothing else to do. That's all. BP. Where is it? Down here. So we talked to, and you've heard Mike and I bang on about this time and time again, about remaining true to the rules. And BP, as you can see, has taken a run at the moment. Our rules haven't triggered yet. We've got our prior double top high up here. We've got our break even sitting nicely at 34.20. Plenty of room to move. But I want to highlight something. This S, and one popped up, I'm trying to think of what the other one is. This S is part of another system that sits within TTR that I won't get into here because it doesn't form part of this, but it's a contrarian based system. And what that means is it's a stop signal. It doesn't mean sell, it means stop. Generally, when you see these, you'll find that an underlying will either stall or may potentially reverse. Do I use this to make a decision on my credit spreads? No, what I do is I just put it into part of my analysis. It's something else to keep in the back of my mind to say, okay, so I've got one of these signals here now, my trade's still in good shape whilst we've had a run up. I'm not going to diverge from my rules, but it's something else to keep there and be aware of as well, just to give you an indication that there may be other signals in play. So keep that in mind. I
just checked the news. Whenever you see a move like that, you want to check news. And the news is yesterday's news was shares of energy companies, which is this is why USO or oil is up as well. Shares of energy companies are trading higher amid a rise in oil prices after Saudi Arabia suggests OPEC could possibly cut their output. So that just happened and yesterday, and that's the reason. Now that's the thing about oil is, you've all heard of OPEC and oil is very volatile. The price of oil is volatile, and that's that's what's moving it up. Now oil could keep rising. If it does, we might be in trouble. So when I'm looking at that BP trade, the first thing and GM as well, is we want to consider finding broken wing butterflies on stocks, on the stock itself or any stock that's correlated. BP is a good example. You can pretty much put up any oil company and it would probably be quite similar to BP. And if you could find a broken wing butterfly on any oil company, maybe we do a quick search, Matt, I think.
Yeah, we might do that. So here's BP. Let's, by way of example, go and have a look at Chevron. Look at that.
Yeah, similar patterns, yeah. I do like BP's resistance level, though, way up top there.
Yeah, it's good. It's good. And because we're up here at this prior double top high as well. Now, we do have, as we can see, we do have a bullish cross, which is a technical signal down here, which is where the 200 crosses the 50. So that is a bullish signal. We have support at 30. We've got support down here at 29 and at 200. My point is this, with this technical indicator, the news that Mike's just spoken about, we do have bullish sentiment in this stock at the moment. So let's go do a scan, Mike.
Yeah.
Yeah, let's see what we can come up with.
I do have a XLE list that has all the oil companies in it. You could run it against that. Matt and I are using the same account. I mean, we could try BP just to start, just to see if it'd be better to have one on BP, but.
Okay, we'll have a look. Hey, Mike, I was having a think as well, because now, as the weeks go by and, where we started with just one-sided credit spreads, we're now getting into Iron Condors, still a credit spread, but two sides. Been having a think about, maybe showing the team how we find channeling stocks and then passing that through an Iron Condor filter. What that looks like. So maybe if we've got time today, we could do something like that as well.
Yeah. Why don't we? I think you need to get hit bullish on this one.
Did not. Oh, whoops.
I think bull should be on top. It's not your fault.
Yeah, no, I'm so used to reading it as bullish and bearish.
I don't know why they did that. That's weird.
Yeah. Here we go.
We got one.
There's one here, 33.50. We'll go have a look.
90% probability the stock stays below the upper break even. That's where the big loss is at. What Matt just said.
What are your thoughts, Mike? And then I'll give you mine.
Well, I think they're the same because I heard you go, That's what I did inside. The hump is the break even coincides with essentially the break even of our credit spread.
It does.
And so what we could do is use the more bullish broken wing butterflies and get one a bit further out.
I think that's a good idea. If not, I'll slightly see if I can tweak that.
Yeah, I would prefer to do that, but
35, 35, 34, 34. Okay.
And then I want to look at the time there. So we've got 23 days and 16. These are going to be higher. I would want 23 days of insurance, not 16 on this. I mean, the 16-day one is fine, but the problem, if you just pull it up, you'll see the problem with the 16-day is that broken wing is going to be pretty long.
Yep.
And it's not that bad actually.
I want to have a tweak with this because the downside risk, I feel, what do we got here? 12, 6. Let me zoom in a little bit. 40, 20, I might go 40, 25. And I will do this as well. Pardon me, just to shave off. There we go.
Mm-hmm.
I like that.
I do too.
That's nice.
That's
But
only
we-
16 days. So,
Mm,
I mean, if that run is a sharp run, if it continues, this will be fine. But if it stalls, then we're going to be dealing with that broken wing, which isn't big. It's only $6, but it's worth looking at the other as well, I think.
yeah, we're right next to that inflection point.
Mhm.
Let's go and have a look here. 34, 35, 36, 35, 50, 30, yeah, pretty close really.
No, pretty same. Yeah, pretty much
Yeah.
the same.
Can I show you what I found on this earlier? Because I was looking at this earlier.
Yeah, sure. Absolutely. Give me 1 sec, Paul. We'll just
Yeah.
finish this one off and we'd love to see what you've got. What do we got there? $6 worth of risk. 36. Where are we doing? 3606, 34.
Yeah, that one, the break evens, the higher upper break even
Yeah.
is low, I think.
That's exactly what I was just looking at here. I actually prefer this one myself, Mike.
Me too.
Mm.
Great minds.
So if we then go and pair, well, not so much pair the trade, but let's put it side by side for a sec. So if I put this one here, and then I'll go and grab the trade again. I'll see how well this works for me. There we go. I'll zoom in a little bit on this side. So I'll make it the same. So we're looking at something equal, 25 and 40. Let's walk through my thoughts, and then Paul, we would love to see what you've got. Fabulous. So on the credit spread here, you can see that we brought in 19 cents. So really what we're doing here is getting an insurance policy with 6 cents of risk to the downside should the bullish momentum continue. Our upside break even at 34.39 here is above our downside break even on the broken wing butterfly, which is great because we've got a little bit of overlap. We'll be able to make back and recover some of the loss on this credit spread as it continues to rise in this broken wing butterfly. But what's even better is, whilst we've still got 58 days, this is what I like, Mike, why I like insurance, 58 days here on this credit spread. If BP continues to rise and we start yielding some nice profit in this broken wing and then retraces, we could either adjust out or close out this broken wing and put another one on and get more leverage out of the underlying through the insurance policy whilst it runs through this run, whilst it goes through this run. And should it remain under this prior pivot high, we'll get about $11, $12 a contract. Maybe it might bounce above depending on when we get out of it. And then if it retraces, we're still within our rules on the credit spread side. So what I'm actually going to do, Mike, is I'm going to go and put this into IB as a paper trade and load it up.
Matt, before you move away from that,
Sure.
could you just briefly cover how you would size your contracts on the broken wing butterfly there to cover your max risk on the credit spread? Mike went through this when he did the XSP broken wing as insurance on the rut trade, and I found that very useful.
Yeah, sure. No worries at all. So the way that I would do this is I would look at, well, where is my risk at this point in time and where would I make an adjustment? So if I was to get a breach, say here on my inflection point, 228, I'll be looking to say, well, how much can I yield on this broken wing butterfly if I was up here at, where's my stop price, 34.95. So 32 around somewhere up here, 35, maybe $11. So what I try and do is recover as much as I can out of the loss up here that I would be getting when the stock runs, which would trigger either my adjustment on the credit spread or maybe an exit on the credit spread to recover as much as I can out of this. So I would size this to what that loss is. But the one thing I can't calculate at this point in time is if I contract the spread up the top here, I don't know what that's going to look like yet. So the long but short way of saying it is I want to try and get as much of this back as possible.
Yeah, what I'm looking for is what your contract numbers would be, and I'm guessing they'd be about 10. On that
So 228, I'm going to
BWB.
garnish, what's this, 32, so 320, yeah, maybe 8.
8, okay, yeah, 8.
So that'll look
All
like
right.
this for you. So it'd be 8, 16, 8. So I would then be holding potential profit of 260, got a cross here at 228, might even be able to get down to 7, but that's what I'd be sizing it as.
Okay,
But as this runs up, my risk is going to contract up here anyway as I collapse this spread, or if I close the spread out, because there's either a fundamental piece of news that's going to propel this on out of it altogether, and I'm just going to shoot the trade. Does that make sense?
yeah, yep. But I was after your number of contracts, and I see now how you've gone for 8, and as you say, could possibly be 7.
Correct. Yep. Mike, what are your thoughts? Because I know you've got your ideas and mechanisms on how you size.
I generally make the max profit on this adjustment as close to max risk as I can get, or a large portion of max risk. I'd probably do 10 here and get my max profit up to $320 or so. And I know that I'm not going to lose 543 on the credit spread, but that gives me more juice to recover. And I know I can handle the risk in the broken wing. It drops here. So the total cost of this trade is $60. You know, that's not much at all. And we can also always contract that lower wing down there and drop that 60 down to, 30 maybe, or maybe even a credit depending on what happens. So we can always manage that downside risk. That's how I think of it is, I'm putting $60 at risk. I mean, the full max risk is at risk, but I know we can manage that. So I'm not worried about 559 max risk, and I can always manage the $60 underneath, squeeze that out, at least have it, cut it in half. So that's kind of the way I think about it. There's no absolutes, and I would stay away from trying to get too absolute and too, match up the max risk with the max profit on the broken wing. It's really, I wouldn't say it's, when I first started doing it, that's what I did. I was like, okay, I need to make sure that I recover 100% of my loss. But it's really, we don't know what it's going to be in the end. So just get a big chunk of cash. Try to get as much of your max risk covered. It's not critical that you get, is it 7 or 8 or 10? Just get something in there and make some money back in the event the stock keeps rising. That's my thoughts.
Thanks, Mike.
Thank you.
Okay. Paul, I will stop screen sharing and go to you if you'd like to show us what you had on BP.
Sure, I did something completely different.
Sure.
Good.
Oops, what's that now? So just as I look at each of these ones separately, it's the same trade. It's the Iron Condor that we've shown, one side of it. When I look at this side, before I'd been, and again, I'm just following these, I'm just paper trading. I didn't want to do anything with this as far as changing where it is, but I did want to put a little insurance policy if we continued to go a little bit higher than here. So I think I'm a little backwards, but I wanted a picture that looked like that. And anyway, that's where I went with it. And the question of the sizing of the contracts, much the same way Mike said, well, when he started out, he just wanted to do the same thing. The max risk in this trade down here is $132, which would have been, I think it corresponds to this. If we can continue down on this, is about $132 there. So it's $132 on this side. And I'm not sure, yeah, about 120 on that if it goes the other way. But I don't know if this is something that could be entered into. It seemed to be. It looks like something interesting as the stock would rise, because the combination things that I would do is enjoy the profit on this, and then if we did pass the break evens on the other side of the Condor, I would make an adjustment on that while utilizing this as an insurance. So anyway, I've got my broken wing upside down to where you guys were.
I tell you what I love about this. The max risk on this trade is what, $130 or something?
It's $132.
And the max
I
profit.
don't know if these are fillable at this thing, but it's just it just came from the scanner. And
Yeah, well, let's just talk hypothetically. Let's say you can get filled on this. The worst case on this one is you lose 130.
yeah,
So if you do nothing with it, you're not going to lose 130. You're going to adjust it. You know how to adjust.
but the thing is, if the stock goes down,
No, okay. You make 120 on that one. So basically what you've done is you've created a situation where if the stock tanks, you lose $10. And if it rises, you make money. That's the point that's what I love. I haven't even thought about this adjustment. You've basically neutralized the downside. So if the stock drops, you basically break even. You might make a little bit of money if you adjust this butterfly. And then if the stock goes up, you can make, and you still have the Iron Condor, the put on the bottom side too. So that's what I want to point out. You basically the risk on the adjusted trade has been neutralized by the credit spread itself. And now if the stock rises, you're going to lose money on the credit spread and you're going to make it back here. So basically you've created a trade where if the stock rises, you have a good shot at making some money.
that's what I'm thinking. And if it does jump up, we still have the opportunity here. I think, yeah, there's a chance to shrink that to a 34. That can turn into a butterfly when what's the break even? 33. When it hits 34, I might enter into a standard butterfly with that, so I don't have all this risk down here.
Yeah. You still got your puts. You can lift up. You can even lift your put spread up and get more
Lift
credit.
puts to pay for something.
Wow. I love it. I love it. I think it's great.
Okay.
Paul, Paul, can I ask you what scanner button you use? Because you've got a put BWB that's actually bullish. So I'm trying to figure out, you said it came from the scanner. I'm trying to figure out
I might have tweaked it a little bit to when I look at this, because I don't think it jumped out. So I probably had to, yeah, I can see I have to make some adjustments on it.
Hey, now, Paul, this is a good time to answer your question about Iron Condors, mixing and matching. I'd like you to do something for me. Could you duplicate this tab, edit the duplicate, and then change the puts in the duplicated trade to calls? This is really, really important that everybody gets this. And this is the answer to your question from yesterday, Paul.
Mm-hmm.
And I'll let you do the exclamation point with the example, and then I'll tell you what's up with mixing calls and puts. And so this put trade would not have come out of the scanner, John, as you point out. This one would have, perhaps. So if you go back between the two trades, this one has calls, and
Yeah.
the one you showed us has puts.
Boy, don't they look the same?
Remarkably exactly the same. Maybe a little bit of advantage one over the other. Sometimes a little bit higher return on investment. Sometimes theta's got a slight advantage. You can look at them and see pretty much they're identical. So yeah, your ROI is the same, max profit over max risk, 354.55. Same on the other. And then you can check your Greeks, see if one has a slightly more favorable Greek scenario. Typically, I'm looking at theta most often, or delta. So you got a 33-cent theta on the calls. What's theta on the puts?
Not sure if I could see that. There we go.
It's yeah, just it's in the other tab.
On the puts.
Yeah. Ah, well, there you go. There now you have, there's no ROI advantage between the calls and the puts. There is a theta, it's distinct 5 times, the theta is 5 times bigger on the calls. On the other tab, the
There's,
trade bill and calls.
We'll save the real question about the similarity because it's it came up with something else. But anyway, thank you for letting me show you that.
Yeah, that's great. And to answer your question from yesterday, Paul, you're asking, should I use all calls should I do long condors, which is all calls or all puts? Should I do 2 credit spreads, which is the typical iron condor? You know, call spread, a short call spread up top, short put spread on the bottom. The answer is it doesn't matter really. There can be a slight advantage of one over the other. Now, one thing I'll end with before we leave this discussion is if you're trading broken wing butterflies directionally, use calls if you're bullish, use puts if you're bearish. And it has to do with the way the Greeks work at the money. And they work better, in other words, without going into, I can go into more detail, but if you're trading directionally, you want to be get in the habit of using out of the money options. They perform better if the stock moves in your direction. They're also better adjusted. And that's why the scanner doesn't give you bullish put broken wing butterflies. It gives you call broken wing bullish broken wing butterflies, and put bearish broken wing butterflies. So there is an advantage with the way they work over time if the stock moves in your direction. Now, same thing for iron condors, Paul. So you can try any of them. So what I do when I put on an iron condor, if I'm adjusting, for example, I'm battening down the hatches, I got call spreads up top, I tighten, and then I come in, I want to throw in a spread underneath. I'll try the call spread, keep it as a call long butterfly, and then I'll also try the puts. And sometimes puts will have more of an advantage than calls, or vice versa. You just take the one that has the best credit, max profit, all that stuff. So, you know, it can make a little bit of a difference.
The
Mike,
nuances.
just before we move away from that call example of Paul's, could he change the risk graph days to 2 to see what his max profit then becomes?
I don't know, can you, Paul?
I would think so.
So that might be even an even better insurance coverage, or one that's just as good as the example Matt put up.
Don't say that, I'll get kicked out of the group.
No. I was going to I was going to say again, there's no
Yeah,
absolute.
sorry,
So it
sorry,
comes down
Paul, I
to-
can't hear you.
Yeah, it's another option to consider. So, you know, there's no absolutes when it comes to this. And, you know, I may or may not have ever come across that combination that that Paul has as well. So I think I agree with Mike. I think it's a great hedge, and definitely the way that it mitigates risk on that credit spread, especially with that that Iron Condor, Paul. And Mike actually said what I was thinking. Given the run that it's had, your put spread, keep an eye on that, because if that run continues, you could either roll it up or shut it down.
Mhm.
Yeah. Yeah.
Because then you're also managing more risk across the three positions. I mean, one broken wing, two credit spreads.
Mm-hmm.
Yep.
Paul, you continue to have me think outside of the box. I've learned from you, might sound crazy, but I've learned from you a few times, and it's clear that you're thinking outside of the box and you're trying things and you're in the game, and it's beneficial to you, of course, but also to the rest of us, including me. So thank you.
Now all I need is a little money in my account to practice it. Soon come.
Good stuff, Paul.
Go get a credit card, man.
Uh,
I'm kidding. As a joke.
Disclaimer. Stock and options trading.
Okay,
Hey,
now there's
Mike,
one trade. Go ahead, Matt.
No, you're right. I was going to say, if there's no more questions or anything, I was going to say we can have a bit of a fiddle around in the tools around Channel Finder and things, and see if we can find some channeling stocks to put through Iron Condor filter. But we'll go to what you're doing, and then if there's no other questions or anything, we could have a play with that.
Yeah. Especially if there's nobody else that has anything. One thing I do want to cover is our RUT credit spread. All right, let me just quickly review. So we've got a Barrett credit spread that was once down 935, and now it's only down 435, which is awesome. And we have a bearish RUT hedge, a broken wing butterfly in the XSP. The bear is worth 100, and then we've lost a little bit, understandably, on the bull. We've lost 20 on that. On the bullish hedge, we made 100 on the bearish hedge. I'll show you the risk graphs in a minute. So we've netted about $80 so far on the hedges, and the trade, at least for now, is behaving well. And so we haven't even battened down the hatches. This is the current credit spread. And so that whole idea of how do I want to say this? What was that, Lucian? The names of butterflies, flocks of butterflies. There was one I liked. What was it?
Kaleidoscope or
Kaleidoscope.
Yeah.
I love that, kaleidoscope of butterflies.
There are
So
a
we
few
have-
others too, which are kind of swarm. I like the
swarm.
swarm of butterflies.
Yeah, swarm sounds more vampiric, like we're
Kind of more
attacking the
waspy,
tree.
isn't it?
Yeah.
Yeah. They're interesting beasts, that's for sure.
Oh my gosh, yeah. So we got a swarm of broken wings. We got one up here that would have, and we weren't sure that this rut was going to keep going up, and it did break down, and now it's bouncing a little bit. So we had a bullish one up here that's going to mitigate, let's just say, the loss in case Powell speaks and the rut rises, and then we have a bearish one that's made us some money. So the question becomes, what do we do with the two hedges? So the bull one, what I'm going to suggest we do on this one is leave it in place. Here's why. Jerome Powell is going to say something on Monday or Friday, 10 o'clock. Maybe by 11 we hear something, and then the market could move one way or the other. So I still like keeping this on at the moment. If we get a correction here, the market drops, we're going to lose $76. I'm happy with that, man. I'm very happy with that. If it bounces up, get a strong move. We still have the 200-day average right here. We got some resistance there. This trade will help mitigate our losses. However, this one can be a bit of a problem for us. This one is actually performing really well. Fade is nice. We've got how many days left? 16 days left in the trade. And so we've got to do something with this by, I would say, probably Thursday night, 9:30 Friday morning at the very latest. Here's what we have to worry about. Is the market going to tank? If it does, this broken wing is going to lose this money. Maybe up to, I mean, imagine that this happens and we're down here. Now, the good news is if that does happen, the bad news is that we're going to be in the loss part of the broken wing. But the good news is that IV will come in and push these lines this way. So the IV rush will mitigate the loss that we would experience if there was a gap down. But we still don't want to play with that. So the question becomes, what do we do? Do I want to turn this into a bearish broken wing butterfly? How would I do that? Hell, we've got 17% profit. So what we could do here is tighten up the bottom wing, take it from 408 to 409. That would balance it. That's one option. And I would say the minimum option to take. So let me edit the trade. I'm going to do two versions of the adjustment. Lift the 408 up to the 409. So I've just edited the trade 408 to 409. I'll do another one here in a minute. And September 9, 5. So we've got 5 contracts, 5. I want to cover this because it's we're going to talk more about this tomorrow probably, but tomorrow at 5 it's going to be almost too late. You'll have to do it 9:30 Eastern in the morning. So I want to do it tonight to give you time tomorrow to play with this and see what you want to do with it. So I've got September 9. Let's see here. Yes, I use colors. I know I harp on it.
You know, when I first started
So
doing this, I never
it's
used
so
the
much
colors. I was
easier
like,
to go
nah,
back
who
and look
needs
at.
that? So used to drive me nuts. I learned very quickly, color code your legs.
Yeah, you look at a trade that's got like 15 legs in it and there's no colors. It's almost impossible to read it. It's hard.
Yeah.
So this one is balanced and it does, all I did was lift the 408 up to 409, creating 5 points between 409, 414, 414, 419. That's 5 points balanced. And then my risk gets mitigated and reduced. Maximum risk is 195 bucks. But we're probably going to get a gap. So I don't really like this one. I mean, we could say, and here's what it becomes. You got to almost pick a direction. Because if this thing gaps, we lose money on this trade. If I duplicated it, and let's say I'm expecting downside, then I could contract this lower spread 1 more point. So I'm going to edit the trade. And then I'm going to change the 409 to 410. And then that'll give us profit to the downside. Yeah, baby. But if Powell paints a rosy picture, boom, we're going to lose on this one. So let me ask everybody there, what do you think what is your instinct? What do you think we should do with this broken wing butterfly by Friday morning at 9:45? What are some ideas that you have? Let me leave it back up there. There's 2 answers, 3 answers. We could also, by the way, we could also do a bullish adjustment as well, which I'm not going to build, but you can always tighten this up further on the upside and create a bullish adjustment as well. You can do whatever you want. Well, we have a catalyst and we don't know which way the markets might go, and they might go, they might do nothing. That's possible too. So let's just try that. 419 down to let's make it 417. So we're going to sell, excuse me, the 419 and drop it to 417, creating profit top. I'm tightening it by 2 points. Oh, I didn't color code. That's okay. I'm doing it the wrong way. Anyway, I'm not going to hack with it, but we could definitely turn this risk graph into profit up top, or at bottom, we could balance it. What do we do? What would you do? We've got currently in the trade, we have 17% profit. We've made almost $100. What do we
So
do?
you got a few things coming in, Mike. Nothing if no substantial movement. Take the money and run. Place another broken wing butterfly. Change or sell or buy.
Yeah, I'm with you. The second answer is where I'm at.
Mhm.
Normally, if there wasn't a potential market moving catalyst, we would just leave this, let this go sideways, maybe tighten this up, balance it. But we have, our prognosis is this: boom, boom, and it could go either way. So I'm of that camp where we've made 17%. The market could gap. I don't know where it's going to gap. So let's take the money and run, wait for the announcement, and then perhaps put on another one.
Can
And
I?
I'm sorry, we're already making money on we're making our money back on our credit spread already. So we've definitely chopped our risk down from 935 to, not quite, maybe like 340, 345 when you take into account the hedges. You were saying something? Matt? Sorry.
Yeah. I was going to say, could you just bring the risk graph back up?
Yeah.
So what everyone may or may not be aware of, well, if you're trading these, I hope you are aware, especially with all butterflies, is theta increases the closer you get to expiration. So if you can scroll up to the Greeks table, Mike, we'll see that theta on this trade at the moment is $10. So if you look down at the risk graph, the closer we get to expiration, theta will actually increase. Now, where risk in the Greek sits with a fly, yes, there's delta risk. Delta is driven by gamma. And as time passes, whilst theta increases, so does your gamma risk, as you can see, which is represented on those lines there. So this is really where you start to get into the Greeks analysis. My point at all of this is, if this announcement on Friday had this broken wing in the last week or X number of days of expiration, what you could do to get a cheeky couple of cents out of the market or couple of dollars out of the market is play the theta gamma war. And that is, rather than getting out of it and parachuting out of the trade on Thursday, wait overnight until Friday morning for a theta roll overnight, and then you might get a couple of extra bucks out of the trade. You wouldn't walk past $5 on the street, but if you can parachute out of this at 9:30 on Friday morning, you'll yield a couple of extra dollars.
Yeah, well said, Matt. Thanks for pointing that out. When I see theta, what I say in my little head is, how much money can I make if I wait a day? And that's what the theta number becomes, especially as you approach expiration. And as Matt points out, that number gets bigger and bigger, provided the stock, well, it does get bigger and bigger, but certainly at the money, at this short strike, that positive theta is maximized, and it gets bigger and bigger exponentially, quite frankly, as you approach expiration. So waiting to the last minute is, the last moment. And as Matt points out, you get another day of time decay by waiting till the morning. So yeah, I think you're right, man. I think getting out Friday morning, 9:45 is a good strategy. That's what I would do on this one.
And bear in mind,
So what
Christmas is coming. Most amount of market close days of the year, load up on theta positive trades. You get paid for the market to be shut.
Mm-hmm.
No risk, no delta risk, no gamma risk, no vega risk. You get paid on theta, even though the market's closed.
Yeah. In that vein, when I do credit spreads on, let me turn off my crazy calendar here so I can point this out. So we got a holiday. It's like, I don't want to get stressed out. Look at my calendar. Look, if you were to want to sell a credit spread that expires on September the 2nd, that's expiration Friday. The SPYs and the diamonds, they have expirations 3 times a week. The SPYs do. So if, for example, if you wanted to sell a credit spread on the SPYs that expired September 2nd, why not do it for September 7th? Because if you did that, then you would get 1 Saturday, Sunday, Monday, 3 extra days of free time decay, sell after the holiday. When I do these calendar spreads, I often will sell on the Monday following expiration on those options that have three expirations a week. I do that for what Matt points out, and that is that you get an extra 2 days of free time decay. So little nuances that can really grab a few extra bucks out of the market. Thanks, Matt. I like that.
No worries. Johnny just asked a couple of questions. Are there any after hours changes? Yes. If you have an underlying that trades outside of market hours, outside of regular trading hours, is 24/7 trading, then yes, it will, you can get filled. So the risk is you've still got delta risk and gamma risk because it's still trading, it's still active, which also goes to your next point. Can the stock gap? Absolutely. Even if it's not trading through those, you see on earnings, and we see time and time again, pre-market open, there's a gap, there's a jump, bad news overnight, earnings, all those sorts of things can definitely happen. So it's about remaining aware of what you're trading, what your position is, where the risk is, and if you're prepared to take that. But if you're on something quiet, well, not even something quiet, something that doesn't have like a whole lot of market momentum or market news, like an earnings announcement scheduled, yeah, be on it overnight. But if you're questioning, will this gap overnight? You've already answered your question, get out the trade, because you're trying to justify why you should be in it overnight.
Mm-hmm. Here's an example. Here's Friday on the SPYs. Here's Monday on the SPYs.
Mm-hmm.
So that does happen. And
Yeah.
the news came out. The market became bearish. They're selling off in front of the Fed announcement, and we get a big gap.
Mm-hmm.
So that could happen. You still get your theta. But you got delta risk. Is the stock going to move and gap? That's all your channel thing?
Sorry, mate?
Yeah, you want to do your channel finder?
Yeah, sure. I might I'll give everyone a quick, well, I will give everyone a quick overview of this. So I'll share my screen again, and this time I'll share the screen. So what I wanted to share with you all today is when looking at an Iron Condor or any, think of it as a sideways type of strategy, you would typically want to find quiet stocks that aren't moving around a lot, therefore giving you a greater probability of success in the trade. So what I wanted to show you is there's a couple of things in Tom's tools that you may or may not be aware of. And Mike and I encourage you to go and have a play with these and see what you think. So if you come up here to stocks and you go down to stock rankers and then go into channel finder, what we're looking to do is find stocks that are running within a channel between a point of support and resistance. There's already pre-configured settings in here. You can open up the wizard, you can play with these around, you know, if you were trading directionally or whatever, you can manipulate these results. But it's pre-configured by the programmers. You can go sideways, run this through, by example, penny plus weekly, hit search. And what this is going to do is it's going to look at all these stocks and find the ones that are in the best configuration of a sideways channel, and it's going to drop them out down the bottom here. And you can see where it's got the center line slope percentage up, down, or sideways. 0 means it's generally pretty neutral. You can click on the picture and you can find, and there's different time ranges, by the way. So you can see you've got your long, your medium, and your short-term channel. So we can see that when you look at your scaling, generally this is pretty quiet as a stock. So you can go through, have a look at these if you want. You can add them to your stock list or any other list that you're creating. If you feel you want to put them through some other filters, and as the weeks go by, we can build on this. We can start looking to get really smart about the Greeks, find low channeling or good sideways channeling with high IV, which will yield a good result for a credit spread as well. So we'll get into that as time goes by. For now, we've found sideways stocks. Come up here then to searches, you go single strategy, over to Condor. And what you can do is click on at the money Iron Condors. Now you see you've got 5 points wide, 10 points wide, 20 points wide. So have a play with the settings, see what you think. Mike has also built settings for Iron Condors. I encourage you to go and reflect on his post and use those. Mike's worked through best practice settings for an Iron Condor, where you can play with what's in here. And you can pass this through your My Stock list, which is right here. And what this will do is it'll take that list of stocks that you've passed through the sideways filter and go and construct Iron Condor trades for you to consider and evaluate based on the criteria that you've put in here. So we'll wait for this to click through and see what it spits out. So we can see here that we've got probability of profit. It gives us volume and OI, bidder spreads, etc. And then it's just a matter of going through and doing your own evaluation on whether or not these are going to be good trades. Now, I would encourage you when looking at this to look at option or look at positions that have an open interest of, say, a couple of hundred contracts or greater. The only reason I say that is because you'll find that your slippage is probably going to be a little bit better. And I'll build on that in weeks to come. But there's nuances where you can go a little bit lower. But if you're just starting with this, try and get some open interest there. So if we look at Activision by way of example, which has just broken my first rule. So let's go down here and look at KWeb. So we'll look at KWeb, and I know about this because I was looking at this last night. You can see here that KWeb is generally channeling between, say, 25 and 30, but we're outside of the yard a little bit up here, which I would prefer that we're not that close to a break even. It is a very short-term credit spread. Again, go back to my settings. You can adjust time, you can adjust distance between strikes, a whole lot of other stuff. But it's just a way for you to take a channeling stock, pass it through a filter, and get candidates for consideration. So
hey, Matt,
this is KWeb.
I was going to say, why don't you load the wizard that I have there, and then look for long-term ones. I think we might find something that we like, perhaps.
Let's go have a squeeze.
You're in my account now, right?
Yeah. Long out the money, wide Iron Condors.
I think that's the one. There's another one there.
Yeah.
Check the expiration dates. Yeah, that's correct. That's the right one.
Cool.
Yeah. 60 to 90.
Thank
Longer
you.
term.
Here we go. US Steel.
Thank you.
Right at the top of the list.
You are on the 19th as well, just so you know. You're 3 days, 4 days back, 5 days back. So this isn't today.
Well, that is slightly awkward, isn't it? You know what? I've seen
It's
that
the worst
happen.
thing ever when you find I can't tell you the number of times I've scanned for trades, found great trades, and realized that it's 5 days too late.
I apologize, everybody. I've actually seen, yourself, Mike, and Tom, and a number of the other instructors do that, and I've caught myself out a few times, and it's always when I'm on a live call as well. Here we go.
Oh yeah.
Bonds, Comcast. Have a look at Comcast. Barket led to OI. What have we got here? 7%. I mean, look at that. Beautiful, quiet stock, channeling sideways, great break evens on either side. 7%, better than a bank's going to give you. And look at how much room you've got on either side. And you can start thinking about, where do I start playing with my strikes to squeeze this 7% a little bit further? Here's my thought process. If you stay in this channel, you might get a run up and you might look to roll your put spread a bit. Or if you get a retracement, you might like to roll your call credit spread down, so you can start building on these to pick additional premium up along the life of the trade. Or you could do a set, maintain, and on monitor and forget. Always keep an eye on your trade.
Mhm. What's
So
the
there's one.
probability of profit on this one? Then?
I reckon it's going to be sensational. What do you think?
I think it's going to be, yeah, sensational. Maybe 80%.
93%.
Wow. Mama. And I would
Does
widen
Michael-
the double, make it a double wide on the both credit spreads and then adjust. You could do your swarm of butterflies and just check this thing.
Hang on a sec.
Yeah.
Do I have 50-cent strikes? I just want to check if I've got 50-cent strikes under 25. Oh yeah, 22.50.
Beautiful. Now you get less ROI, of course, but
Yeah.
so you can tighten it a bit if you wanted.
Mm-hmm.
Yeah, I like this, Matt.
Probability. But this is just another tool in your toolkit, everybody, for you to think about. So, you know, the sniper system's awesome. You've got a catalyst. You find premium. You manage your trade. You manage your hedges. This, we're still using credit spreads like we are in snipers. You're getting additional leverage out of your margin. You're finding quiet stocks. Another really good tool for you to have that complements what we're already doing in the sniper portfolio. Thoughts, Mike?
2 thumbs up. I love it. And we have the scanner for it, and we know how to adjust. We can do swarms of butterflies. You know, just go at this world with credit spreads and take high probability profits out of the market. It's outstanding.
Yep. Look at these probabilities, Mike. 94, 93, 92. Look how many candidates you've got here. Just even above 80 for consideration. This is nuts.
For an Iron Condor.
45. 45 that you could look at. Anyway, I'm getting a bit excited. And I know that we're a little bit over time. So look, Mike, I'm going to wrap myself from here, and I will hand back to you, mate, for final thoughts.
Yeah, man. Thank you so much. Just checking the questions here quickly. If anybody has anything they want to bring forward, bring it forward. I would love for there to be a little bit more participation. I mean, if you want us to talk for an hour, we can do that. You know, I can do it. Matt can do it. So, Maddie, please answer something.
For 3 hours.
I've done it. I do it all the time. Johnny wants to know getting additional leverage out of your margins. And Maddie, please answer.
Yes. So what happens is when you've got your credit spread, if you've got a credit spread sitting there, your margin is the maximum risk of the distance between your strikes. When you've got an Iron Condor, the way that it works is it takes the maximum amount of risk out of one side of the spread. So you won't get, if you had a 5-point spread up top and a 5-point spread down below, the way your broker looks at it is where's the maximum risk? It's 5 points. So they will only use one of those credit spreads as your maximum risk. If you had 10 points up top and 5 points down below, then you would have that 10 points as your maximum risk. So what you're getting is you're able to do 2 credit spreads only using one of those, the margin on one of those credit spreads. So that's when I'm referring to additional leverage. It's like free margin because it's already covered in one of the spreads.
Yeah, beautiful. Well said. So just as an example, Matt, we have one of our Iron Condors on United Health has 20 points up top, 20 points down below. You can't lose on both. So the broker says only one. You got to cover 20 points, and then the sum of both credits, 308, is covered by only one spread. The margin is only required on one side, but you get to use all the credit. So the effect of that is to greatly magnify, not more than double your credit. From just a regular 1 credit spread to an Iron Condor, you over double the maximum profit over max risk than just doing the credit spread by itself. It's beautiful. It's a beautiful thing. One of the benefits of Iron Condors.
Well, if you can't get cheap commissions, you may as well get greater margin leverage, right?
Yeah, exactly.
That's the way I look at it.
Well, thanks, everybody. Good to have you. We're going to do this again tomorrow night. I've posted the XSP broken wing hedge in the thread up here. Let me show it to you. So if you have any questions about which of the broken wing butterflies I was talking about that needs to be dealt with before Friday at 10 a.m. is this one. This is the bear's hedge. So that's it. That's the one you want to deal with before, and then otherwise let everything ride. I was up all night with fever and sweats, and you know that gnarly, creepy feeling when you have a fever. I caught something. I don't know what it is, so I'm going to take a break here and go
have
take
a
a nap.
question.
But yeah, Claudia.
Matt, so you found the Iron Condors through the single strategy link. There is no link under hedge fund mastery for the Condors.
Yes, correct. So we use the Condor Finder, and then you can tick at the money Iron Condors, and then you can select the width that you want, 5, 10, or 20, I think it is. But Mike's built some settings that you can actually go in, Claudia, set up and save your own scanner in there. So you're correct in what you say. It's not under the hedge fund mastery button.
Yes.
It's a standard scanner, and Mike has then built on that. And you can put the settings in and save it as your own.
You have some wizards saved that we don't have on our side.
Yeah, I sent
Yes.
them, Claudia.
Oh, okay.
Yeah,
Okay.
I sent the settings. The settings are in the WhatsApp thread. I don't know how far back that was, but I did post them. I'll find them and repost them.
I have to check those. Yes.
Yeah. It's in the thread for sure. I can't remember when we spoke about it. And I don't know if I posted it in Hedge Fund Live. I think I posted it in both places. I'll find it and repost it so it's easy to find.
I've just done it, Mike.
Oh, thank you.
Thank you.
No worries.
All right, everybody. John, are you at a bar? When you say hydrate, is that wine okay?
No, you need water, man. Fluids. Yeah, I'm
I
at
always
Love
loved